Hi all, good evening and welcome. I am Ridul Mishra from the Corporate Communication team, and on behalf of CareEdge, I welcome you to our today's discussion on Indian airports, smooth runway post-pandemic. We sincerely appreciate your time in joining us for this webinar, and we would like to welcome our esteemed guest speakers for today. We have with us Mr. Sundeep Malik, Head Portfolio Development, Zurich Airport International, and Mr. GRK Babu, CFO, Airport Sector, GMR Airports Limited. This session will be moderated by Rajashree Murkute, Senior Director at CareEdge Ratings. We will commence the session with a presentation by Maulish Desai, Director at CareEdge Ratings, which will be followed by a panel discussion, and thereafter a Q&A session with the audience at the end of the discussion. In case of any queries, you are please requested to key in your panel. Now, may I invite Maulish to please begin his presentation.
Yeah, thank you, Mradul. Good evening. Good evening.
Yes, Maulish, please go ahead.
Good evening and warm welcome to all participants and esteemed panelists for today's webinar, Indian Airport Sector, Smooth Runway Post-Pandemic. We shall cover today's session in the following sections: traffic performance, capex guidance, regulatory landscape along with potential for non-aero revenue, and a quick glance at the financial performance of the major PPP players. Towards the end, we shall deliberate on attractiveness of twin airports in vicinity, followed by key takeaways and sector outlook. Now, let's begin the session with the glance on passenger traffic recovery post-pandemic. According to Airport Council International, global passenger traffic growth shall be driven by Asia Pacific over next 2 decades till 2040. Within this, India is expected to be second fastest growing country by passenger numbers after Indonesia. In this context, let's see the monthly traffic recovery post-pandemic in Indian airports. As seen on the left side of the chart, domestic flight resumed operations from end of May 2020. While passenger traffic took 9 months to ramp up to 4x of June 2020 level, it again dropped sharply in May 2021 due to second wave. Interestingly, this time, passenger traffic recovered within 6 months. Resumption of international traffic from March 25, 2022, increase in pace of vaccination, and receding impact of COVID-19 led to steady recovery for the airport traffic. Subsequent to the third wave in Q4 FY22, passenger traffic touched 90% of pre-COVID level in Q1 FY23 and appears to have taken off well. As seen from the next slide, Care Ratings expects passenger traffic to reach 93% of pre-COVID levels in FY23, making a V-shaped recovery for the sector with 70% traffic growth in FY23 over FY22. Care Rating expects full recovery in international traffic by early FY24, apart from steady domestic traffic. Thus, passenger traffic is expected to surpass pre-COVID level to 1.12 times in FY24. Let us now look at growth propellers aiding traffic recovery. As seen from the chart in the left side, there is a multiplier effect between passenger growth rate and GDP growth rate. During FY16 to FY20, CAGR of passenger traffic was 1.8 times of GDP CAGR. Over FY23 to FY25, Care Rating expect air traffic growth rate to be at 2.25 times that of GDP growth rate, primarily due to low base in FY22. India has a favorable demographics with the large working population, around 67% of total population in the working group of 15 to 64 years in 2020. Going forward, rising working population and widening middle class demography shall propel the passenger growth and consumption. Declining fare gap between rail and air, new fleet addition by major airlines like Air India, and expected resumption of operations by Jet Airways shall also drive passenger growth. Thrust on the greenfield and brownfield expansion of airport is also significant positive, as explained in the next slide. Care Ratings estimates capex of around 80,000 crore over FY23 FY25, mainly to decongest existing capacity and create greenfield capacities at 4 locations. CapEx shall be dominated by PPP airports with lion's share of 72%. As inferred from the chart on the left, 60% of the CapEx is estimated at a non-metro cities, auguring well for the traffic prospect for Tier 2 cities. Total debt requirement is estimated at around 60,000 crore. However, funding challenges are viewed relatively moderate, supported by truing up mechanism in the future revenues and a longer concession period of 40 to 50 years, strengthening refinancing flexibility. As mentioned on the right side of the slide, share of traffic handled by Indian PPP airport stood at 53% in FY19. CARE Ratings opines that share of PPP airports in total traffic shall further increase to 67% by FY25. We shall now move on to the present status of privatization of existing airports under National Monetization Pipeline (NMP). As inferred from the chart on the left side, of the total 21,000 crore, NMP has estimated fund inflows of 13,000 crore till FY23 through monetization of 14 airports and divestment of Airport Authority of India (AAI) stake at existing airports. However, aforementioned timeline appears ambitious, thus necessitating intervention from GOI. In CARE Ratings view, these timelines are likely to be deferred further. Let's move on to our third section on revenue composition and regulatory landscape for Indian airports. Revenue stream for airports comprise of aero revenue, non-aero revenue, and real estate income. Basis data of pre-COVID year of 2019, share of aero revenue stood at 54% in India, followed by non-aero revenue at 40%, which is in line with global trends. In this context, let us now examine the regulatory framework prevalent in India and the consequent impact on the revenues of the airports. The regulated return on aero assets with a hybrid till structure involving true up or true down of the revenue take care of the traffic fluctuation at the time of subsequent tariff determination process, that is next control period. There is an evaluation of a well-defined regulatory environment in India with matured tariff setting process. As seen from the center of the slide, over the years, there has been a significant delay in the reduction in the issuance of the tariff order. In fact, tariff orders have been issued in 2 existing PPP concessions in FY22 with a marginal delay of around 6 months, thus bolstering investor confidence. Timely receipt of the tariff orders for the upcoming control period renders strong revenue visibility and aids in recouping losses in aero revenue. However, it is pertinent to mention that there has been delays in issuance of first tariff orders in some of the concessions, necessitating remedial action. Now we shall share our perspective on non-aero revenue. As we all know, non-aero revenue mainly comprise of duty-free, food and beverages, retail, rental, advertising, car parking, etc. In case of Delhi and Mumbai airport concessions, cargo and ground handling charges are considered as a part of non-aero revenue, while in other concessions in India, they are included in the aero revenue. As inferred from the slide, yield per passenger for non-aero revenue for international peers versus Delhi and Mumbai airport is higher at 2 to 3x, while non-aero revenue for AIA managed airports is further lower at USD 1.6 per passenger due to lower international traffic. In the next slide, let's examine non-aero revenue composition of Indian airports with Asia Pacific peers. As inferred from the slide, F&B and advertisement income are comparable with Asia Pacific average in the pre-COVID era, while car parking income is relatively lower on account of availability of a multimodal transportation facility in India. But the large gap is visible in case of income from retail, which is significantly lower at 34% in India as compared to Asia Pacific average of 57%. This is attributed to relatively lower duty-free income per international passenger in case of Indian airports. CARE Rating believes that airport acting as a hub carrier for various destinations which have transfer traffic proportion of at least 10% in overall traffic are better placed to maximize non-aero revenue potential. As per industry sources, average transaction value of Indian airports is largely in line with the global peers. However, penetration rates are relatively lower. Therefore, there is a need to enhance product offering and improve service quality. Improvement in customer satisfaction through lower waiting time can also enable passengers spending more time and resources at airport, thereby boosting its non-aero revenue. We shall now take a look at the potential of cargo handling income. Compared to global peers, cargo handling penetration at Indian airports stood a lower at 3.56 MMTPA in 2019. CARE Rating believes that with the planned capex of 2.6 MMTPA in enhancing cargo handling capacity, Indian airports can fetch incremental annual revenue of 1500 crores. We shall now proceed to the last part of revenue stream, aerotropils, untapped developmental opportunity for Indian airports. As seen from the chart on the right side, there is a large land bank of 2350 acres across major airports in India, out of which 88% land is unutilized. Therefore, city-side development of land bank is important for value creation and monetizing non-aero revenue. Airports worldwide are gradually shifting towards becoming business and retail hubs instead of restricting themselves to air travel passengers. Jewel Changi Airport is an example of city-side development which has been successful in boosting non-aero revenue despite COVID-19 outbreak. We shall now share our perspective on aggregate financial position of 9 PPP airports, which represent 50% of India's passenger traffic. The revenues are estimated to grow by 50% from 6,500 crore during FY22 to rupees 9,700 crore during FY23, mainly on account of strong passenger growth. Besides, issuance of first tariff order for 6 PPP airports and growth in international passengers are likely to translate into healthy revenue growth by 45% for FY24. During COVID period, AAI provided relief to airport operators by exempting claims on revenue share. Due to this, in FY22, EBITDA margins remained healthy at 56%. However, with resumption of revenue sharing with AII, EBITDA margins are likely to moderate around 37% during FY23. In FY24, EBITDA margins are likely to stabilize at 45% on account of scaling up of operations. As seen in the right side of the slide, the leverage marked by net debt by EBITDA at the end of FY23 is expected to remain at elevated level of 7.16 times considering COVID ramp-up phase. However, the net debt by EBITDA should improve to comfortable levels from FY24 onwards, despite large debt-funded capex, mainly on account of EBITDA expansion. Longer residual concession of the airport also continue to impart financial flexibility to the credit profile. Before we conclude, let's deliberate about twin airports. Is it synergy or threat? As mentioned in the left side of the slide, San Francisco City has 3 airports in a hub and spoke model. San Francisco International Airport is the hub airport with full service carrier dominance and lesser low-cost carrier presence, whereas Auckland and San Jose have LCC dominance with 74% and 53% traffic respectively. Few other notable illustrations of twin airports from Asia Pacific successfully operating are Bangkok and Jakarta with annual passenger capacity of over 100 million and 75 million respectively. From credit perspective, dual airports in same city are typically exposed to traffic diversion risk. However, wider catchment area, higher volume of passenger traffic, higher per capita income, adoption of hub and spoke model, and efficient route development strategies are likely to offset the impact of traffic diversion. Therefore, in Indian context, influence of aforementioned factors shall pave way for either value accretion or restriction respectively. With this ponderable, we shall now summarize the key takeaways from our today's presentation. Passenger traffic in FY24 is expected to reach 1.12x of pre-pandemic levels. Second, passenger traffic CAGR to be at 2.25x of GDP CAGR during FY23 to FY25 on account of low base of FY22. Debt of 60,000 crore is expected to be raised to fund the capex program of 80,000 crore over FY23 to FY25. If we look at the regulatory environment, so that is also conducive for existing PPP concessions marked by timely issuance of tariff orders. However, there is a need to narrow down delays in issuance of first tariff order. Non-aero revenue potential can be tapped through increased transfer traffic levels, enhanced product and service offering at the airport. Despite huge capex, the leverage levels are likely to reach comfortable levels supported by increased scale of operations and consequent EBITDA expansion. Overall, the outlook for the airport infrastructure sector is viewed stable from negative, indicating a smooth runway post-pandemic. Thank you very much. I shall now hand over the session to Mradul Mushra for further proceeding.
Thank you, Maulesh. Now may I invite Rajashree Murkute to take over the session, please. Rajashree is a Senior Director and heads Infrastructure Vertical at Care Ratings. She has 20 years of industry experience specializing in corporate credit rating with a focus on the infrastructure sector and retail banking at HDFC Bank Limited. She has been associated with Care Ratings since 2006 and has led various rating teams across diverse sectors within infra and corporate verticals. Over to you, Rajashree.
Thank you, Mradul, for the quick introduction. Good evening, all who has joined the webinar today. We look forward to your participation as we move ahead. I will just take a quick introduction of our esteemed panelists who have joined us. Mr. GRK Babu, he is currently the CFO Airport Sector of GMR Airports Limited and has over 33 years of rich experience in fundraising, tax compliance, secretarial, treasury, and fund management. Prior to joining the GMR Group, he served as Vice President, Finance and Company Secretary of ICOM Tele Limited, and he joined the GMR Group in October 2007 as CFO of GMR Hyderabad International Airport and moved to DIAL as CFO in August 2011, where he oversees strategizing refinancing solutions from domestic and international sources for GMR Airports Limited and its subsidiaries. Welcome, Mr. Babu.
Thank you.
Our next panelist for today is Mr. Sundeep Malik. He is currently the head of portfolio development at Zurich Airport International and has over 20 years of rich experience in international business development, M&A, financial management, project financing, and asset management. He was former CFO at Noida International Airport, India, and relocated to Zurich in 2021 as portfolio management head. Mr. Malik has also previously worked with the Changi Airports International, Tata Group, and Siemens. Warm welcome to you, Mr. Malik.
Thank you, Rajashree. Happy to join today for the session.
It's a couple of the opening remarks is we have seen the presentation from CARE, and because of so many questions and thoughts hovering on the key issues pertaining to this sector, we felt it appropriate to actually hold this webinar so that some of the best minds can come together and deliberate on the aspect. Before we start on the panel discussion, I would urge Mr. Babu to take up this first question that we have. There has been, notable improvement in issuance of tariff orders. I mean, we saw that in the presentation as well. But there are persisting issues when it comes to first tariff order issuance that still persists. So in your view, what are the major challenges and what all can be done to address these?
If you look into the history of the tariff determination, especially regulatory environment in India, so the airports, we have been saying it, the regulator was formed in 2009 by the Ministry of Civil Aviation. So the first tariff order they were released was in 2011 only, 2011, December, that too only for the time. So they took quite a lot of time in the initial years of 2 to 3 years to formulate the policies, to formulate how we should proceed, various guidelines as they have issued. Subsequent to that, because when the first tariff order was issued for the dial, especially in November 2011, the DF order, and then by April 2012, they issued the first tariff order for the Delhi airport, covering from 2009. So that was a huge lag. But subsequently, we have seen, because all the airports, there were differences between the regulator as well as the airport operators. So we have always approached the appellate tribunals and then high courts, Supreme Courts. As a result, sometimes the regulator was also not able to release the tariff orders. Subsequently, most of the issues have been settled, and over a period of last 10 years and 2 regulatory cycles have been completed. And now we are in the 3rd and 4th cycle. Now we are seeing that regulator is much more prompt, and most of the issues have been settled, and expecting that the tariff order should come, as Mollis has explained, in a period of 6 months in the control period when it starts. For example, in case of the Goa, now we are going to start our operations in December, most probably by end of November or December. We have already received the ad hoc tariff order from them, and they have also said that they will try to complete the tariff determination process in the next 6 months, and by April 2023, they would give us the full tariff order. So it has been evolving, and most of the issues have been settled now, and we can look forward saying that now the tariff order should come well in advance of the control period. Let us hope for the best. Rajashree.
Sure. So basically, what I gather from you mentioned is the evolution is definitely there. The pace and the direction is already set in. But maybe for a couple of years, perhaps this COVID also would have given a setback, and now things are again back in the right direction. So we should expect some fast-paced action very soon. My next question is for Mr. Malik. See, undoubtedly, we are in interesting times, as we all see, and pretty unusual as well. There are multiple events which are unfolding, be it the pandemic or the geopolitical crisis around us. So traffic recovery per se has been fairly prompt at all of these events that we have seen. But, in your view, given the prevailing geopolitical turmoil, what is your sense on the sustainability of this traffic recovery?
Yeah, thanks, Rajashree. Quite a good question, I would say, in the current times. Perhaps from my perspective, if we look at the traffic recovery, what we have seen it, this can be analyzed from some of the key drivers of traffic in the Indian market specifically. One has been increase in the low-cost carriers. Secondly, has been the growth of the middle class. And the third, what we have seen it in the past was increase in the airport infrastructure spending. Now, if we look at these 3 factors and apply them in the current context, we do see the emergence of new LCCs in India. Economic growth in India is definitely is showing resilience despite the global challenges, I would say. Economy is still forecasted around 7% in the current financial year. And in terms of the infrastructure spending, specifically on the airport sector, I think your slide also rightly estimated it's around 80 to 85,000 crores over the next 3 to 5 years. So the key drivers are there for the traffic to have a steady recovery. Now, you refer to a geopolitical risk. My assessment is that the impact of geopolitical risk, specifically for the Indian market, for the Indian recovery, is assessed to be quite minimal. So in a way, the analysis has been in the past, and this remains as of now, that markets which have a large domestic traffic base, they will continue to witness a steady recovery. So overall, the risk is minimal, I would say, at this point of time. There could be some impact on the fuel prices. This could have some impact on the airfares also. But overall, the assessment is that the recovery will be on a steady path. And I think what you have shown it on the slides seems to be the view which we also take, that the traffic is going to witness a stronger recovery in the coming period.
Okay. So in terms of CARE's view, it has been that, this year, that is FY23, the recovery should be on an overall basis about close to 93% of the pre-COVID levels. In your sense, as you said, Indian airports per se seem to be fairly insulated relatively, if I may say so, from the geopolitical turmoil. So this number is something that you are also saying should be fairly intact in terms of achievability of recovery.
Yes, our assessment is along similar lines. We would see a strong, steady recovery on a continued basis for the Indian market. And now whether it reaches the pre-COVID level or there could be a possibility that it could even exceed the pre-COVID level, that is more in terms of the right estimates. But overall, the traffic is going to be on a strong recovery.
Great, sir. Got it. Mr. Babu, considering you've been, a veteran in this airport development, so if we look at, the capex plans which have already been unfolded, close to about 80,000 crores that we're looking at next 2-3 years, both in terms of greenfield and brownfield capex plans. So as an airport developer, do you see the investment appetite waning for this capex? And are you foreseeing any challenges in fundraising from the sector's perspective? It's a twofold question.
Yes, I mean, actually, the aviation is looking more promising compared to any other industry right now. As Malaysia has presented, there is a strong growth which is expected in the next 4 to 5 years. The capex plan as of now, for example, in case of GMR, where we are spending, in case of the Delhi, we are almost spending 12,000 crore rupees. We are completing the expansion by next year, September. In the Hyderabad airport, we are spending almost 7,000 crore rupees, taking our capacity from 12 million to 34 million capacity. In Delhi, we are taking from 66 million to 100 million capacity. And the Goa airport, we are now building capacity for 7.7 million. So we are spending more than 3,000 crore rupees. And we are also having the capex plan in case of the Vizag airport. We are going to start in the next year, which we have already won the concession. So as it is, I do not foresee any problem in the spend on the capex. There continues to be continuous expansion will take place in India because the growth is going to be very, promising. Funding opportunities, actually, if you look at it with the past experience, the current market conditions in India, earlier in case of the GMR, we moved out from the banking sector to the international bonds. Total our financing, both DIAL and HIAL, we did through international bonds from 2015 onwards. More than $2.5 billion we raised. But now looking into the Indian market, there is a good appetite is coming from the Indian market. Very recently, we have successfully completed 1,000 crore rupee bond placement in case of DIAL. We are not forcing any problem. Actual banks are more comfortable now with the traffic coming back and growth taking place. I do not foresee any challenges in financing the expansions or coming up new airport in the current context.
Got it, sir. So that's pretty encouraging to hear that the capex plan at least will be mostly on target because generally we've seen some kind of deferment in terms of timelines because as we saw in the presentation as well, the monetization plans per se have not really kicked up too well. I mean, there has been a lag on that front. So fundraising from that particular avenue definitely looks slightly taking a backseat. But it sounds encouraging when you say, for the airport developers, things really not too much on a worrisome platform.
But during the COVID period, there was a lot of stress.
Definitely.
All must have passed through, but now it is much promising.
Great. Mr. Malik, the next question is for you. See, actually, there have been few surveys, and these were conducted on the European airports. So what was observed is close to 65% reported that the route development strategies, the budgets which they have allocated, were close to about 65%, which is at a decadal high as we see. And this was primarily done so that these airports can attract airlines. So do you think there is merit for the Indian airports to emulate a similar strategy or something? And what can be the possible revenue upside in case if they deploy such large budgets?
Yes, I think there is a potential to attract more international flights into India. I think there is no doubt about it. I think from my perspective, this could be looked at from two angles. One could be at a macro level. So we see that there are air service agreements between countries. There could be an increase in the seat allocations under bilateral agreements as well. New airports, greenfield airports could be identified as separate points of call for additional seat entitlements as well. So that is at a macro level. Now, if you look at from an airline's perspective, I do agree with you. Giving a larger budget to route development makes sense. But the more important part will be how do you actually actively engage with the airlines? And the need there will be to develop strong business cases, which can be presented to the airlines, that these are routes which are financially viable. They make sense for an international airline to connect to different airports or different points in India. That is one. Secondly, I think from international airlines perspective, another key driver could be what are their key components of their operating cost. Now, in this context, I think one important factor to highlight is the cost of the aviation fuel in India. Now, if something can be done to have a relook into the structure of the aviation fuel, this can also act as a strong enabler for international airlines to introduce more flights into India. So definitely there is a strong potential for growth. The only way is there are some structural issues that need to be addressed, and there needs to be a strong business cases to be presented to the airlines.
So broadly put, in terms of the structural issues, would be largely to do with the costing and the tax regimes and so on, which you think would be potential. That is how they can be addressed.
Exactly.
Okay. Mr. Babu, your thoughts on the same?
No, I agree with you what Sandeep has explained. Actually, in the route development, for example, when we started this exercise from 2008 onwards, when we started Hyderabad, in case of the airlines, actually airports can support which route is profitable, which is route unserved, and which route they can discontinue also. So we used to provide a lot of data to the airlines and supporting them which route they should start and really encourage them to start. We will be providing much more information to the airlines. For example, now Hyderabad is having more than 70 destinations connected because the way we have given the data, the way the transfer packs are taking place, which airlines are doing it, really we can provide a catalyst flow, and airlines always take an advantage of it. And of course, in the route development seminars, whenever they attend, they always exchange of views. But I agree with Sandeep that yes, airports do play a good role in development of the routes for the airlines.
Sure. So in a nutshell, basically the airports and airlines together anyways, if they function as business partners, then definitely, more strategies can be evolved and will be a win-win situation for both the partners.
That has been happening also. They also take a lot of support with us.
Mr. Babu, the next question is for you. In terms of, we saw that in the presentation as well, some of the key drivers influencing the non-aero revenue is also the hub carrier or the transshipment hub as we see. So in this context, with fleet addition by some of the major airlines and resumption of operations of a prominent airline, including Jet, so do you foresee any possibilities of any of these destinations being acting as a hub carrier in India?
So, for example, Delhi, Air India is also already a hub carrier, and Vistara is also a hub carrier here, and Indigo. So they have been operating it as hub carriers from here. So when it comes to the hub carriers and you have a transit passengers, because actually you have a lot of transfer packs, which is very critical. Because if you have got only OND traffic, that will be only destination to destination. But in international, you need more of traffic, transfer packs, which will help you a lot. And now actually we are developing a lot. We are looking at it now, a lot of concentration on transfer packs from east to west, especially from Bangladesh, Nepal, and everything to Delhi, and then going to the Europe as well as the and the US and the longer destinations like Canada and all places. Transfer packs actually helps us improving our non-aeronautical. The main reason is the O&D traffic, a lot of stress will be there on the airport infrastructure, especially on the check-in, then immigration and security and all. But in the case of transfer packs, it is only directly moving the transfer passengers from boarding bridge to other boarding bridge, from domestic to international, international to international. So transfer packs, when we took over, for example, in Delhi airport, is only 4%. Then subsequently it went to 50. Now, as of now, in the last 6 months, our transfer packs is almost 25% in Delhi. Out of 25% is more than 19% is domestic, about 6% is international. So to facilitate more transfer packs, even Delhi airport in the expansion now, we have enhanced the area by 3x and we are just opening it shortly, maybe another 1. So transfer packs do play a vital role in our non-aeronautical revenue growth. And it is always advantageous to have more transfer packs. That will give us the better revenues.
So, Mr. Malik, in your experience, considering you've also had stint at various other airports, so how does that pan out in some of the other global peers?
Yes, I can share some experiences here. I think airports do play an important role, and I share the same view what Mr. Babu expressed. In fact, from an airport's perspective, from a transfer passengers point of view, the strategy has to be how to make the transfer process faster, I would say, how to make it seamless or smooth for them. Now, giving a specific example, in Noida International Airport, which we are developing, we are introducing a kind of a swing aircraft contact stand. And what this contact stand will do, it will provide a kind of flexibility to airlines to operate both domestic and international flights from the same contact stand without repositioning the aircraft. So this is a kind of some features that you can develop or build into your airport design process so as to make the transfer process faster. Now, another area which I believe in Noida, we have already, we have been following up on this. There is this concept of a common security hold area for domestic passengers. Now, this we have seen it as kind of an internationally accepted practice in most of the overseas airports. And this is something that we are also trying to introduce in Noida Airport. We are working with authorities on that front as well. So, but overall, I think transfer passengers, they help to increase the overall traffic. That is one. Increase in the overall traffic definitely has its own ancillary effects, which Mr. Babu highlighted. Some increase in the non-aeronautical revenues also.
In fact, kind of a connecting question on this. So there is a separate survey which was done by Airports Council International, wherein it was observed that close to, for every 1% improvement in the passenger satisfaction levels as they measure, close to about 1.5% increase in non-aero revenues is expected. So that's the connection and the relationship that has been observed. So in your experience, which areas are the key areas that can be focused in Indian context so that these levels can be boosted further?
Yes, I think this is a good question, I would say, from my side, because it's typically difficult to establish a direct correlation between a satisfaction level and an increase in non-aeronautical revenues. Now, unlike other factors like you mentioned about GDP multiplier, increase in per capita income, these have a more or less a direct correlation with increase in the traffic. But definitely what we have seen it is there is a correlation. It does help to augment your non-aeronautical revenues. And the concept there is if your passenger satisfaction or the touch points or the key passenger processes are smooth, this will help to de-stress the passenger and they will be inclined to spend more at an airport. And when I say the passenger satisfaction levels, these are directly linked to operational efficiency at an airport. Now, when we say operational efficiency, we are mostly linking to, say, waiting times, queuing times, punctuality, strong adherence to service level agreements with your service providers, developing infrastructure in line with the demand. I think the key to increase the satisfaction levels at Indian airports will be a strong performance monitoring system. I think that is needed. and well-defined service level agreements with your service providers. I think these two will be the key drivers to increase the satisfaction level at Indian airports. Other than that, definitely technology, I know, plays a very important role in having a seamless experience for the passengers. That is something that is definitely being looked at by most of the airports now.
So
I agree with what Sandeep said. In case of the transfers and the seamless transfer, see, always the passenger is always under stress. He always wants, for example, if you go in international, then first is a check-in, then immigration, then security. Then only you'll get relaxed. So when you provide these seamless transfers to the passengers, then automatically it is not only the satisfaction you get, but your non-aeronautical revenues also goes up, because he will able to spend the time either on shopping or on spending the money on F&B or anything else. So that is always all the airports will try to do that, unless you are chocobo.
Sure, that's really insightful. I have a common question for both of you. To start with, Mr. Babu. See, we had covered, a kind of the last slide. Towards the end, we wanted to deliberate on whether the twin airports phenomenon that we've seen in multiple cities, whether it's going to be a threat or will it really be a synergistic kind of a approach. So, in your view, what is your sense? Because it has also been observed that close to top 31 cities in India, they were expected to have dual airports. So there's something perhaps more of a long drawn plan and so on. So how do you foresee, and which side would you like to take when it comes to this phenomenon?
No, I do not foresee that dual airport or triple airports will be a problem for the existing airports. For example, Delhi, and in case of GMR and two airports, one is Goa is going to be the first dual airport city with a simple population of 1.5 million. And whereas Delhi is going to have a dual airports because Noida is going to operate. And if you look at it, we are already building the capacity to 100 million. So when we look at it, the Noida airport, we consider it as a complementary to us rather than a competition. So they can take over all the domestic traffic, or they can take over the traffic which is around them, because we also reach a saturation at one particular point of time. Then there is a stress on the airport infrastructure. So we will concentrate only on the routes which are more beneficial to us, and so that in that context, the other airport can become complementary, and the other airport also can start building up their own revenues, their own traffic. So dual airport, as long as there is a traffic growth, as long as the city is big enough, is always helpful. For example, other context, in case of Goa, we are now building the new airport, which is Greenfield Airport, whereas the existing Babu airport is already there. But it is basically the existing airport has got a lot of restrictions. For example, they got a blockade 5 hours every day, morning 8 to 12 and 3:30 to 4:30. So all is a tourism city. So even though it has got a very less population as a Goa, but it has got a huge traffic with regard to tourism. So both airports will certainly able to function. They can be complementary each other. Otherwise, our airport is going to run 24/7, whereas that airport will run for a shorter period. But both can exist and they can complement each other. That is my view, instead of competing. Over to Sandeep.
No, thank you, Mr. Babu. I share the same view, and in fact, you used the right word, complementary, in a dual airport system. And perhaps what is important to highlight here is, if we look at the catchment, say whether it is the Delhi NCR or it is the Greater Mumbai catchment, or even it's Chennai or other metros, the assessment is that all major Indian cities have such a large catchment with a relatively very less propensity to travel in India. As of now, with a growing middle class, we see that the traffic will need to be serviced by at least 2 airports or even more than 2 airports. Now, in your presentation earlier, I think you highlighted the examples of Jakarta. You gave the example of Bangkok. We could also look into the examples in London or in Moscow or in Tokyo. So, and these are catchments which are relatively smaller in size as compared to the catchments what we will see in India in the coming years. So definitely we also look at it from the same perspective. It's going to be a complementary relationship. The catchment is big enough, large enough to be serviced by 2 airports. And I think this will also help in a way in connecting passengers between the airports as well. So like Mr. Babu mentioned, one airport could provide larger connectivity on international routes. One airport could provide connectivity on the domestic side. And our global experience has been providing connectivity to these airports. Now, whether it is in terms of a metro train or a road connectivity, a kind of a seamless transfer between the 2 airport system is also going to play an important role. So we have been laying a lot of emphasis on providing this connectivity to new airports in the country, and that will also definitely help the process. But in terms of the Indian market, we have seen recently there are some plans announced for a second airport in Chennai, because the existing airport is expected to be saturated by maybe in another 5 to 10 years time. So there is definitely, there will be a need for second airports in the Indian situation.
So by and large, I think the common features and the remarks that I'm gathering from both of you is, more importantly, if the strategies are correct in terms of the bifurcation or what kind of traffic can be attracted at either of the airports, then there is absolutely no competition between the two. Plus, in any case, you also mentioned about the airport connectivity, the city modality, and so on, which can only ease the aspect of access to the airports, and that is how the congestion can be addressed. So fair enough, sir. So we also look forward to more of such dual airport phenomenon in India as well. I think it's catching up soon. Hope to see a little more. Brothers, can we take up the audience questions? Can we check?
Yeah, sure, Raj. So we'll open the floor for the participant questions. We would like, in case of any queries, you are please requested to key in the questions and we can put forward to the panel. Thanks.
So while the questions are actually getting keyed in, Mr. Malik, one particular question for you which I had is, what has been your experience when you compare the city side development in the global peers versus what are the learnings for the Indian airports? Is there anything which is outstanding, a top 3 things that you can share?
Yes, I think I'm happy to share the example from our Zurich Airport. So we have a kind of a mixed-use city-side development in the Circle. And what we have seen it in the Circle, which is just adjoining or connected to the Zurich Airport. To give you an idea, this development involves a kind of open spaces, green parks. It also involves, we have 2 hotels along with a convention center which has come up. There is some F&B, there are some showrooms there, and definitely there is a office spaces for airlines and other important stakeholders in the aviation community. So I think from a perspective of, we call it as the city side development, I think there has to be some kind of synergies that need to be developed with an airport environment. Now, that synergies could be, typically what we have seen it is, to begin with, is the hospitality sector, because you need hotels, maybe for the crew, for the transit, or for the transfer passengers. That is typically the kind of first developments that we see. Over a period of time, we will also see a demand for a good quality office space. Now, this could be for airlines. This could be for agencies which are working in relation to aviation sector, maybe cargo or logistics as well. And over a period of time, you would also see some demand for other related facilities. Now, this could be a kind of institutional sector. So in a way, the city side development has to be done in a phase-wise manner. I think that is the key takeaway. Secondly, there has to be some kind of synergies identified with an airport as well. And this is in relation to the location of the airport, the passenger profile, and all that. And the idea, what we have seen it in the past is, airports have now need to be positioned as a destination by itself. Now that plays a key role in developing your city site as well. So these are some of the key takeaways. Definitely for the Indian airports, there is a potential. I think the Delhi AeroCity is a very good example. I would say at Delhi Airport, where we have seen a cluster of good quality hospitality segment being developed there. So that's quite a good example.
In fact, that actually paves way. It makes it more attractive for people to kind of plan their trips when it comes to choosing which destination or which area they would like to fly down. That's really wonderful. We have the first question which has come up. Mr. Babu, if you can take this up.
Yeah.
So this is from participant Rajesh. So he says share of transfer traffic exceeding 10% in the overall traffic. They typically influence non-aero revenue. In case of India, only Delhi has transfer traffic contributing more than 10% of the overall traffic. In this context, do you see possibilities of higher transfer traffic at other metro airports in India?
Yeah, the transfer traffic, as I explained in Delhi, we are already seeing 25%. And for example, even Hyderabad is also seeing more than 10% transfer traffic now. So more or less, I think Bangalore also must be having good transfer traffic, because now the tier 3 are connected to tier 1, tier 2 are connected to tier 1. So because of this transfer taking place, now the more and more destinations connected, transfer packs are getting connected more and more. But all these in metro airports, it is happening. But tier 2 cities, the transfer packs taking place will be very limited right now. And as far as the other metros are concerned, it is more than 10% now in India. In Delhi, it is more than 20%, and in case of Hyderabad, it is more than 15%.
Hello?
Yeah.
Sure, Rajashree. Please carry on. Yeah.
Sure. Okay. There's one more question. I request Mr. Malik to take this up. GOI had initiated few policies to make the sector more attractive for private sector participation. Yet, if we see the pace of monetization, that's not very encouraging. Given your past vast global experience, what are the top 3 areas which you think can potentially boost PPP in airports development?
So our experience has been, because we have looked at other markets as well, and when we look at from a PPP angle, our assessment has been that India has been at a relatively advanced stage. Now, from a PPP perspective, I think what is key is that there has to be an optimal risk allocation between the government regulators or the government agencies and the private investors. Now, in the Indian context, we have seen it that this has been done successfully. I think Delhi and Mumbai airports dates back to almost 15 years. We were also involved in the development of Greenfield Bangalore Airport as part of that PPP process. I think what is key factor is a stable regulatory framework, which I believe has evolved in India and has now become to a stable situation. I think Mr. Babu highlighted at the start of the presentation that the tariff orders are now being delivered on a timely basis. The 30% hybrid till structure is very well defined now. What goes into the till, what remains outside the till is also very clearly defined. Concession periods are relatively long, which is 40 to 50 years. Now, these provide relatively longer periods for investors to recover their investments as well. In terms of the capex requirements, there is a flexibility now provided. These are linked or triggered with traffic growth as well. So, in a way, I would say that the regulatory framework especially for the Indian airports has been very stable, has been very attractive. And I think the best example that I can give at this point of time is that Zurich Airport, we have come in as a 100% foreign investor in developing the Noida International Airport. That itself is a best example to showcase that the PPP framework to attract private investors, foreign investors in the development of Indian airports, I think is quite attractive.
So effectively what you're essentially saying is that while we look at the capex requirement for the sector that is on a buoyant phase, the passenger traffic outlook also is pretty favorable. And, as you had also mentioned in the earlier part of the presentation, that by and large, India is relatively insulated from the geopolitical turmoil. So things seem to be, the fundamental seems to be fairly at a rock solid situation. Yet when we see the private sector participation, that is still not kind of taking up neither the investment side of it. So definitely here, the regulatory framework, as we see, that needs to firm up a little more and have the policies have to be more stable, which is how I gather the investments will be attracted. Fair enough.
In fact, just to give you an example, when we look at the regulatory framework, especially in India, right, I would say that this is at a relatively stable and well-developed level. Because if I look at countries like Indonesia or Vietnam, which are also experiencing strong passenger traffic growth, yet the regulatory framework is still at an evolving stage. So I think India takes the lead. If I look at it amongst the emerging markets, the regulatory framework, the 30% hybrid bill structure is a very well-developed, I would say, a very stable framework, which is being made available to the investors now. And in terms of the foreign investments, I think our example is a good showcase that we have gone into Noida and we have gone in as a 100% foreign investor.
Great. Mr. Babu, there's one question from Mr. Dilip. How can technology facilitate in boosting non-aero revenues? So I think part of it was kind of mentioned in the presentation, but if you have any separate thoughts, you can touch upon this as well.
Technology, yes, it will certainly help the passenger to spend more when he is under stress. For example, in case of Dial, we have introduced a concept saying that you can book in the website itself in advance for your food and anything else. You can come and take it. And you can also book your products so that we will deliver to your house. That is where we have introduced. The third one, which we have introduced a lot, is during the COVID period, public are very scared. They do not want to make it. They want to go to the boarding gates and sit there. So we have developed an app and given to the passengers. There is always every gate we have one person will be available, and he will go to the passenger saying that if you want to book anything, we will arrange to you this place. And the payment also you can make the payment only after the food is delivered. Because again, you will be under stress that gate may open, they may call. That has really helped us to improve our F&B sales and certain sales very high. And passengers were also very good. They were very happy with that. So technology always drives, but the only thing, how to make use of the technology is very important. We continue to innovate it, how to make the passengers more and more happy to provide more and more facilities to them. But we have been continuously developing the apps and app-based services, and we hope to so that will help us to improve our non-aero revenues.
I think that was, we had few more questions, but I think we are kind of running ahead of time, closer. Thanks. I think this has been a very interesting session, and more importantly, we did get some very clear answers from you both. Now, all in all, we do believe Indian airport sector is gearing up well, despite all the challenges. Enabling policies and their implementation definitely would continue to be the prerequisites for attracting more investments into the sector. So thank you once again, Mr. Babu and Mr. Malik, and all the participants for taking out time from your busy schedules and joining us today. Thank you, Malaysian team, for the insightful deck presentation. I shall now hand over the session to Mradul for closing remarks. Wishing everyone on call a festive season ahead.
Thank you. Thank you, Rajashree. Wish you the same.
I also wish festive greetings to everyone. Thank you.
Thank you, Rajashree. And again, to to all the participants, and Mr. Malik, Mr. Babu. It was a privilege hosting you. For any feedback, suggestion, comments, you can please welcome to write in the comment box, which will be coming no sooner the webinar ends. Goodbye for now, and I request the tech team to log off, please.